Hey gang, Dennis Tubbergen here with another market update. It is Friday, April 13th, Friday the 13th, 2018. I want to talk to you today about what's going on in the stock markets, and I have on the screen in front of you a daily chart of the S&P 500 index. This is once again a Japanese candlestick chart. The green bars on the chart represent days the market has gone up. The red bars on the chart represent days the market has gone down. If you take a look at the oscillator that I have plotted across the bottom of the chart, it is a slow stochastic. It is more of an oscillator than an indicator, and it tends to pretty accurately, as you can see from the chart, show when stocks are overbought and show when stocks are oversold. So for example, if we look at the January 26 high here, you see that stocks were overbought for quite a long period of time. Then if you look at this bottom, which is February the 9th, you see stocks were oversold. And then you see that stochastic really mirrors that price action. Most recently here at the 1st of April, you see that stocks were again oversold, and now they're approaching overbought. They're approaching overbought, and we have a series of lower highs. Now what we don't have here is a series of lower lows, so that's where we're really at a critical point here. We believe that the highest probability for the market here is to the downside for reasons I've just outlined, and we get a little bit more of that when we go back and look at a weekly chart. So here is 1 minute here. Here is a weekly chart of the S&P 500. And I have an indicator now across the bottom of the chart, which is the MACD indicator. The lines on the chart here, the histogram, shows the difference between these two moving averages. One line is the difference between a 12-week and 26-week moving average, and the other line is a 9-week smooth average of the difference between those two moving averages. Some traders trade the crossovers. So you see we have a crossover here, which would indicate that the market would likely decline from here. Now here you see the difference in the histogram number. It's ticking up. So does that mean that markets are going to recover from here? Well, if you put it in context and go back and take a look at what this indicator did back at the market bottom here in 2008, 2009, you see that these moving average lines dropped well below the histogram. So there could be a lot more downside here for the markets when you put it in that historical context. So that's what we think the highest probability is at this point. We will, however, need to make some new lows from this point on. That's today's market update. It's Friday, April 13, and I'm Dennis Tubbergen.